So, energy giant Kinder Morgan just dropped some huge earnings. And yeah, the numbers are pretty impressive. But this isn't just a story about one company's profits. Nope. This is really a story about our energy future and how two massive global trends are changing everything right now. Okay, let's get into it. Behind all the big headlines about this record breaking year, there's a really fascinating story. It's about geopolitics, it's about global energy security, and it's about the explosive growth of technologies like artificial intelligence. And it all comes down to one fuel and the pipelines that carry it. And it really all kicks off with this number right here, a 22% jump in adjusted earnings per share in a single quarter. Now, for a huge, typically stable infrastructure company like this, that's not just growth. That's a seismic shift. So what in the world is going on here? And maybe more importantly, what does it tell us about where things are headed? All right, first things first, let's just quickly break down the numbers that are making all this noise. The final quarter of the year was, well, by pretty much every measure, a total record setter for Kinder Morgan. And when you look at the details, what's really wild is the scale of the growth across the board. I mean, adjusted EBITDA, which is a key way to measure profitability, that climbed 10%. We already saw that huge 22% jump in earnings per share. And then look at net income, up a staggering 49% from just last year. Their CEO even said these are big numbers for a stable midstream business. And the engine behind all of this? It's one thing, natural gas. And that brings us right to the heart of this story. This incredible performance is being powered by a massive surge in demand for natural gas, a surge that's being pulled in two completely different directions at the very same time. The company's executive chairman, Richard Kinder, he calls this growth astounding. But he's not just talking about one good quarter. He and the company see this as a foundational shift for the rest of the decade, all built on their massive network of pipelines and a really, really stable business model. So here's the key to how they make their money. It's mostly through something called take-or-pay contracts. The best way to think about it is like a subscription service, right? Customers reserve their spot in the pipeline, and they pay for that capacity whether they use all of it or just a little bit. This model basically shields them from the crazy swings in gas prices and gives them this incredibly predictable flow of cash.
Okay, and this is where it gets really interesting. You've got these two powerful forces creating all this demand. On one side, you've got exports. We're talking liquefied natural gas, or LNG. With the U.S. now being a crucial energy supplier for Europe, Kinder Morgan's network is moving over 40% of all the gas headed to those export terminals. Then, on the other side, you have this massive power boom right here at home, mostly to feed the absolutely voracious appetite of new data centers and AI. And get this, a whopping 70% of that new demand is right in the states they operate in.
And if you think the demand is big now, just look at what's coming. This chart shows that the demand just for LNG feed gas is on track to more than double by 2030. That's not a wave of demand, folks. That's a tsunami. So, if you know a tsunami of demand is headed your way, what do? You don't just stand there and watch it come. You build. And Kinder Morgan is investing billions right now to expand its energy highways to capture all that future growth. And the scale of this bet is, well, it's clear. $10 billion with a B. That's the value of the projects they already have approved and in the works. That's their current project backlog, and it's all designed to move more energy faster. This chart tells you exactly where that money is going. A massive 90% of that $10 billion backlog is for natural gas projects. And of that, nearly 60% is to directly support that power generation boom we were just talking about. They are going all in on this twin engines of demand. And get this, that $10 billion backlog, that's not even the end of it. The company says it's already working on another $10 billion plus in potential projects beyond that. It just gives you a sense of the absolutely tremendous market opportunity they see on the horizon. So when you've got record performance and you're making these massive investments, what's the end result? Well, it's a company that's actually getting financially healthier, even while it's spending billions to grow. And hey, you don't have to take their word for it. The big credit rating agencies are definitely taking notice. S&P recently upgraded Kinder Morgan's rating to BBB+, and that's a clear, independent signal that their financial footing is getting stronger. And their debt-to-EBITDA ratio, which is just a key way to check a company's financial health, has improved. It's now down to 3.8 times. This basically shows they're managing their debt really well, even while funding all this new expansion. And for investors, the results are pretty tangible. The company just announced another 2% dividend increase. That's a huge signal of confidence, and it turns today's great performance into direct value for shareholders. Okay, so let's zoom out from the balance sheet for a second, because this company's story is really bigger than just pipelines and profits. It's like a snapshot of our world at this really interesting energy crossroads, where traditional fuels are powering the explosive demand from next generation technology. So let's just recap the crucial points here. First, Kinder Morgan's record year was almost entirely driven by its natural gas business. Second, that was fueled by two huge demand surges happening at once: global LNG exports and domestic power for things like AI. Third, they are investing a massive $10 billion to build the infrastructure to meet all that future demand. And finally, all of this has actually made the company financially stronger and more stable. And this leaves all of us with a really critical question, doesn't it? I mean, the data is pretty clear. Our demand for power, driven by these world-changing technologies like AI, is just exploding. Kinder Morgan is making a massive bet that natural gas is the essential bridge to meet that demand. But the bigger question for all of us is it the right bridge? As they build the infrastructure for the next generation, it's a debate that's only going to get more intense.